So today I'll be giving a presentation on a US company called Floor Decor. Before we get into that, let me just step through a couple of slides up front. First is my bio, so I don't really need to step through that again. But before we get into the stock, what I wanted to do was really just spend a couple of moments up front to set the scene for how Montaka invests and what we look for in great opportunities. So our formula for success is to try to identify large, reliable, structural transformations with favorable economics, and then we seek to identify and own advantaged businesses which are high probability long-term winners in our assessment. And we want to own these, if and when they present highly favorable reward per risk ratios. And so as you'll see throughout the presentation, we think this company, Floor Decor, satisfies these three criteria today. Now, before we get into the stock, what I want to do is just dig into this one element of our formula which talks about high probability long-term winners. So we're talking about businesses with competitive advantages, or really businesses that are protected from competition in some way. I'm from the Bruce Greenwald School of Competitive Analysis. Many listeners, of course, will be aware of Professor Greenwald from Columbia Business School. And he basically says that competitive advantages are driven by barriers to entry. And there are several enablers of entry barriers. So there's things like economies of scale. So the bigger you are, the lower your unit costs, and you can use that cost advantage to improve the customer experience or grow your market share, stuff like that. Another source of entry barrier is something called customer captivity. So if your customers are entrenched and they can't easily switch, for instance, then you might be able to increase prices over time. And there's a source of entry barrier called replicable assets, so monopoly type of assets. These, of course, given their inherent protection from competition, if they're monopoly-like, they also allow you to increase prices over time and extract higher returns on invested capital. So today I actually want to build on these concepts a little bit because in our view, what's even better than competitive advantages is competitive advantages which are strengthening over time. And to us, this is where the concept of flywheels comes in. So let's start with a simple thought experiment. So what do all the businesses on the left-hand side of this chart have in common? And of course, we have financial services, we have asset managers, we have tech platforms, we have a retailer, and I might add that all of these happen to be stocks in Montaka's portfolio today. Well, in our view, they all exhibit flywheels. So what are flywheels? So flywheels are self-reinforcing dynamics where economics of the company are shared with the customers to form kind of like a symbiotic relationship where the customer does better when the company does better and vice versa. So in our views, flywheels strengthen competitive advantages over time. And then the question is, well, why does this even matter? Why is this important for investors? Well, I think, history shows that equity markets routinely underestimate the value of businesses that can reliably grow over extended periods of time. So for these sorts of scenarios, as growth persists for longer than expected, you tend to get like really outsized stock price appreciation as the market upgrades its forward-looking growth expectations over time. So you get like this cycle of underestimation to surprise to upgrade, and this keeps repeating itself over and over again over many years or even many decades in some instances. So for us, reliable growth over long periods of time is both extremely valuable and often underestimated by the markets, and that's why we think it's important. But of course, growing reliably over very long time horizons is really, really hard and really, really unusual. So, we acknowledge that the overwhelming majority of businesses will never do it, but only truly advantaged businesses in very large and or growing addressable markets have a chance of achieving this valuable feat. And so we believe flywheels are an essential ingredient to this success, and you'll see why that's important context for Floor Decor as we step through. So, with all of that said, that's a little bit of context, a little bit of a backdrop to set the scene for what we're going to discuss today. But now let's jump into Floor Decor. So this is a US-based big box specialty retailer of hard surface flooring. Quick introduction here. So the ticker is FND, listed in the US. The market cap is a little over 8 billion. Enterprise value 10 billion, revenue $4.5 billion thereabouts. Keep that number in your mind, that $4.5 billion per annum revenue number. Just we'll compare that to the market size in a few moments. This is, as we said, a big box US retailer. We've put a chart or just a little picture on this slide so you can get a sense of what it looks like inside one of these stores. They're massive stores, typically like 90 meters by 90 meters average size for those who are on the metric system. They sell laminate, they sell vinyl, tile, wood, stone flooring, those sorts of things. Massive number of SKUs per store, about 4,400. This company was founded in 2000s, 25 years old. It's quite amazing, actually. This is a business that, it really feels like it's in its early stages of growth, but it's been 25 years in the making. And the chief executive officer is a guy called Tom Taylor, who's very, very experienced, has been in the industry for, more than 40 years, which we'll come back to him in a moment. So let me start by giving just a brief summary of our investment thesis, and then we'll dig into specific sections in a little bit more detail over the coming slides. So starting on the top left-hand side, we see a really big opportunity in the United States for hard surface flooring. The market today is about $40 billion US per annum. So again, compare that to the $4.5 billion thereabouts of revenue for Floor Decor today. So it's a big market, but what's more important than the market being big relative to Floor Decor's size is it's important to understand that this market is absolutely at a cyclical low right now. And so just keep that in mind. We think that there's a ton of pent-up demand. So you've got, and we'll talk about this in a moment, but you've got, a deep cyclical trough today. At some point, we will come out of that. And then there's a lot of sort of catch-up demand to be had over time as well. So that's point one. Point two, top right-hand side, we really believe that one of the most special attributes of Floor Decor's business model is the way it sells. It has a real flywheel business model. By specializing in hard surface flooring, it's really able to build scale and bargaining power with suppliers. It buys directly from suppliers. It doesn't go through middlemen. It's able to get lower costs. It then chooses to share those lower costs with customers through better prices. It drives a better customer experience, greater adoption. That drives further scale and so on. And so we see a long-term horizon of growth, like really reliable growth over a very long period of time, and we think that that's underappreciated by the market today. The bottom left-hand chart, you can see, look, it's a growing market position. This is just the number of stores in the US. Floor Decor is the only player in the space that's growing market share. All the others are, only Home Depot is holding its share. Lowe's is declining a little bit. And then there's a ton of independents who are all just getting, wiped out is sort of the polite way of saying it, and are really donating share to Floor Decor. So we think that this growing market position is evidence of its flywheel in action. And then, of course, bottom right-hand side, the best-in-class leadership. So we really believe that this Chief Executive Officer, Tom Taylor, really is the best in the business. He started out at Home Depot in 1983. By 2006, he was running merchandising and marketing for all of Home Depot's more than 2,000 stores. And he's been at Floor Decor for, going on 13 years. So great experience there. Okay, so for the remainder of this presentation, let me step through the following 3 pillars of our investment thesis in more detail. So we'll talk about how the US market for hard surface flooring is both large but set to grow as well. And think of this as kind of like the outside view. And then we'll move into the next 2 sections, which is more like the inside view of the company and the investment opportunity. And we'll dig into Floor & Decor's flywheel dynamics, which strengthens its competitive advantages. And then we'll get into why we think that its current earnings are really quite depressed relative to where we think future earnings will be. Okay, so let's start with the US housing market, and specifically let's look at existing home sales. Now, existing home sales are a primary driver of demand for flooring, as you might imagine. So, if you're preparing to sell your house, you might get the floors redone. Similarly, if you've just bought a new house and the floors are a little old, you might take the opportunity to clean them up then. Or replace them. So it seems to be a really important demand driver. And what's really interesting about US existing home sales, for those who sort of don't follow this super closely, despite a US economy which is really quite strong today, the housing market is in a deep cyclical trough. So existing home sales in the US are back at 2008 GFC lows, and you can really see it clearly on this chart. That's a little counterintuitive for people who aren't following this sort of day in, day out. But that's where we are. And so that sort of speaks to one of the reasons why the hard surface flooring industry in the US remains at a cyclical low today. Now, the reason why it's at such a deep trough today is because really just US interest rates. So the 30-year fixed mortgage rate in the US is about 7%. It's been up at this range for the last 3 years. Compare that to it was at 3 or 4% for the last decade. And because you can, lock in these really long-term fixed mortgage rates, which is a little unusual in the US, it's not like that in a lot of countries around the world. You've got this dynamic where even today, 60% of existing mortgages out there are at fixed rates at or below 4%. So if you have one of those mortgages, you're just not going to touch that. You're not going to transact. You're not going to do anything to upset that mortgage, because you would then have to restrike it at 7%. So you've got essentially two-thirds of the housing market basically frozen. And so, until interest rates start to come down a bit, this industry will remain a little bit depressed. But, when it does come down, you can see how, in all likelihood, there'll be a big cyclical upturn. Let's now jump to new housing starts. And of course, new home starts are an obvious source of demand for hard surface flooring. It's interesting to note that these two are running at pretty subdued levels. So US new home starts remain at 1960s levels, which I found really surprising, when we learnt this fact. Not only that, the population growth today, even though in percentage terms perhaps it's a little lower, but because the base is so big, population growth is running at about 3.3 million Americans per year, so much higher than the sort of little over 2 million growth per year back in the 1960s. So essentially what that says is that the new home starts are not keeping up with population growth. Far from it. Only about 1.5 million new homes are being built each year. And I mean, industry experts say that there's this has been the case essentially for the last 2 decades, where new supply is not actually meeting demand. So, all this says to us is that on a go-forward basis, more homes are needed in the US. There is a lot of pent-up demand, and over time, that of course leads to additional demand for hard surface flooring. And then the final point to all of this is that the existing stock of US homes are really very old. So the median age is about 44 years old in the US. Many homes are pushing up to like 70 or 80 years old. If you look at that chart shown on the right-hand side, the map of the US with the color coding, those little counties where they're like really quite dark red, that's where the housing stock is like 70 or 80 years old. So there's a lot of old homes around. Just again, that means that there's significant demand for home improvement and flooring. So if you put this outside view all together and just summarize, for us it basically says that future revenues are locked in, though the timing of those revenues is unpredictable. So just to recap, existing home sales cyclically low will rebound. Pent-up demand for new homes. Median home age is 44 years old. Lots of need for care and maintenance. It's interesting to note as well, just for interest, hard surface flooring versus, call it soft surface flooring like carpets, is actually growing structurally with market share. So 10 years ago, hard surface floorings accounted for about 45% of the flooring market, and today it's like 60%. So there's this structural mix effect, which is another tailwind for hard surface flooring within the space. So this market in the US is about $40 billion per annum today. That's been basically flat for 3 years. We think that just has to reaccelerate in the not too distant future. And then it's also worth knowing that there's a record $11.5 trillion US dollars of tappable home equity. Now, tappable home equity means how much you could actually draw out of your home right now to sort of maintain an equity cushion of 20% of the total value of your home. And that figure, that 11.5 trillion, is 50% higher. It's actually a little more than 50% higher than 2019 levels. So there's plenty of funding, if you like, available to fund these home improvement projects over time. And then interest rates are at 2007 levels today. You take your own view on where interest rates are going, but over time there's probably some downside in there. And then I included this quote. I'm sure many listeners will have seen the Sir Chris Hone podcast a few weeks ago. Thought it was a great interview, but he made the comment, recurring revenue streams are important, but the predictability of when they recur is not important. And I just thought that sentiment, it's well said. It's not obvious all the time, and it really applies to this investment opportunity in our view. Okay, so that completes the outside view. Let's now take a look at the inside view of Floor Decor, and we'll start with its flywheel dynamics that we think strengthens its competitive advantages over time. So for us, this slide is key. It really maps out the flywheel dynamic that we think drives that strengthening in competitive advantages over time. And again, why is that important? Well, it leads to durable growth over very long time horizons. And if you can get that, well, then history shows that those dynamics are almost always underestimated by the market. So I'm going to start with the pink arrow that says reducing costs. So over here, you start with the fact that they specialize in hard surface flooring. Now, this is different, like a Home Depot or Lowe's, only 5% or certainly less than 10, but some tiny fraction of their store is allocated to flooring, they can't hold nearly the variety or the quantity of inventory or SKUs as a flooring decor. So the fact that flooring decor can really specialize in one thing, that means that their purchasing power with suppliers is really quite strong. And in fact, their purchasing power with suppliers, it's not just about what they're purchasing today, but suppliers can also see where this industry is going. And they can see that, on a 10-year view, even though Floor & Decor is the second largest in the space today, they'll easily be the largest in 10 years' time. So they have huge bargaining power over suppliers. That allows them to get costs down. They can buy very, very well. That allows them to share those reduced costs with customers through lower prices. And now you're into the bottom right arrow, which is all about customer experience. So it's lower prices every day. It's a great range in stock, so that creates a wonderful experience for consumers, especially pro consumers as well, who are doing the home improvement projects on behalf of household customers. They really invest in great in-store customer services and education and things of that nature for the pros. So it's a wonderful customer experience that drives adoption and greater market share. And now you're into the left-hand side arrow, which is greater sales. So greater store sales, that allows them to also expand their stores over time, increase their market share. And of course, all of that is just another way of saying that their scale in the market or their market share is increasing. That greater scale then allows them to reduce costs further, and then they can share those reduced costs with customers through even lower prices, and they drive even more scale, and so on and so forth, and so it goes on. So as we said up front, we see evidence that this flywheel is working. So the store count, we've already discussed it. They're up to about 254 stores at the moment. Still a tiny fraction, by the way, of a Home Depot, which is, more than 2,000 stores. Now, they're not trying to get to 2,000 stores, by the way, but they said they can easily go north of 500 over time. And then the market share chart is just on the right-hand side. And this is where you can clearly see that Floor & Decor are the only ones in the market growing share. As I said, they're currently the second largest in the market. Home Depot is still the largest. Home Depot's share has just been flat. We actually see Floor & Decor overtaking Home Depot probably around 2030, thereabouts. Maybe a little after, we'll see. Lowe's, it's there or thereabouts, shrinking just a touch, but it's really those grey bars this market is still dominated by independents. Independents are subscale. They have to buy from middlemen. They are at a severe competitive disadvantage. They cannot compete with Floor & Decor on costs. Their prices have to be higher. Their range, their SKUs have to be lower. They're just at a really difficult competitive position, and so it's not surprising to see them slowly give up market share over time, and we expect that to continue. Okay, and now finally we'll take a look at the economics of Floor & Decor's business model, and we'll compare these to its current market cap of about 8 billion and enterprise value of about 10 billion. So let's start with the key value drivers of Floor & Decor's earnings power. And for this chart, it's easier to start on the right-hand side, and then we'll work our way back to the left. So let's start with the two right-hand side charts first. So we've got the US hard flooring market. So that's the 40 billion number. And you can see, it was growing up until about the sort of 2023, fears of the US recession, very high interest rates. That market started to stagnate a little bit. And so for all the reasons we just described about existing home sales and stuff like that. The chart beneath it, though, shows that over this time, Floor & Decor's market share has just been increasing structurally, and we see that continuing, again, primarily driven by its flywheel dynamics. Look at the two vertical middle charts. So we see the store base, which is currently at 254, as we said, increasing over time. This year, even though the market's still a little challenged, they're still going to open another 20 stores this year. So we see that it'll continue on. If the market happened to really bounce back quickly, they could accelerate their expansion, but otherwise it's just going to grow steadily. There's at least another 250 stores to go in the US there. The chart beneath it, revenue per store, you can see how it was growing. Now it's taken a little dip the last few years, and that's primarily because of the weak market. There's another dynamic here, though, which I just want to highlight, which is to do with the age of the existing store base. So as you can imagine, if you open a new store, it takes a few years for the revenue of that store to kind of increase to its sort of long-term normalized levels. Said another way, revenue per store is lower in the early years than it is in the later years. And it turns out that about 40% of the current existing store base is still like 3 years or younger. So just from the existing store base maturing alone, you would get, a positive tailwind to that revenue per store. And that's separate and apart from, the market turning around cyclically. So all of those drivers combine to give you the top left-hand chart, which is just the total revenue of Floor & Decor. That's the $4.5 billion that we discussed up front. And so, over time, this will not only grow, but, if and when the market bounces back, it really could accelerate quite substantially. And then the bottom left-hand chart, the profit margins of this business. Now, there's a couple of points to make here. First, the operating margin, which is the darker line, and that relates to the left-hand axis. That's currently only at about 6 or 7%, quite depressed. It was higher a few years ago, and it's the market weakness has forced it to reduce. As you'd expect, there's fixed cost leverage in this business to do with the rent of the stores and things like that. When the revenue per store growth has turned negative, as it has for the last couple of years, you would expect that fixed cost leverage to be a bit of a headache, and that's what's happened. But what's super interesting actually is the lighter line, that grey line, which is the gross margin of the business, which relates to the right-hand axis. And that's actually been going up through this very, very tough period. And it really speaks to the quality of this business and the levers that this business, or really the management teams of this business, have to maintain and grow profitability even during really challenging times. So they've been able to increase their gross margin even while retaining their price gaps to competitors. So they always want to price below their competitors. And they've done this through a couple of different techniques. One is, again, they're just able to buy better from their suppliers. They buy direct, and then they also have more bargaining power than everyone else. So that's really helped. Number two, they're really clever at sort of tactically pushing customers to sort of better and best products rather than good products. They sort of have this good, better, and best 3 tiers for each kind of product in the store, and they're good at tactically pushing customers to call it, slightly higher margin products. And then they've also been, like many others, they've been working towards supply chain productivity initiatives and things like that. So I think I skipped a chart. Here we go. Yes, so this is the chart I want to talk about first. Let me just spend a couple of moments, again, just digging into profit margins, and I'll just talk about the operating profit margin again at the moment to really demonstrate why we think today's margin of 6 or 7% is really not reflective of where we think long-term operating profit margins will end up. So shown on the chart is the profit margin of Floor Decor in the navy blue line, and then Home Depot, just for reference, in the sort of the reddish coloured line. Now you can see it's lower, of course. Now Home Depot is a very different business, totally different scale. They have more than 2,000 stores in the US, so they're like 8 times the store base of a Floor Decor. What's interesting though is that we wouldn't be surprised if in the fullness of time Floor Decor not only gets up to those levels of Home Depot but overtakes it. And the reason is that Floor Decor has 10 extra percentage points of gross margin to start with. Now it's a different product mix, of course. Floor Decor just do hard surface flooring, whereas Home Depot do a whole range of home improvement products. But Floor Decor have 10 extra percentage points of gross margin to start with than Home Depot. Said another way, the operating expenses below the gross margin line of a Home Depot is, round numbers, call it like 20%. Whereas for Floor Decor, it's at like 37% today. So you can imagine that as the market turns and as Floor Decor builds up scale, they'll really be able to leverage that really quite significant operating expense as a percentage of sales, which is really very high at the moment, up at 37%. So there's quite a lot of room for that to come down, which is another way of saying there's a lot of room for that operating profit margin to increase over time. Building on that argument is the age of the existing base of stores. So this point I made earlier, but I just want to underscore it again. So what this chart shows are the operating profit margin of an individual store on the vertical axis, and then on the horizontal axis, it's how many years the store's been open. So what it shows is that if you've opened a store and you're just in your first year, your profit margin is going to be negative. And the reason for that is because, your sales are lower than you're just starting up. The sales are not where they're going to be in the long term. They're just a little lower, but you've got all the fixed costs associated with the store. You've actually also got additional costs associated with, pre-opening and funding your working capital and all sorts of things. So you start with a negative profit margin. Then maybe after a couple of years, you're getting around to break even. Then after 3 years, you sort of in the sort of mid to high single digits. But then over time, in years 4 and 5 and beyond, you are actually getting up into the sort of the teens, mid-teens, or possibly even high teens operating profit margin. And what's really important to underscore again is that 41% of the store base today are 3 years or younger. So you're really in that kind of negative to sort of break-even-ish zone. So if you did nothing else, if you didn't open another box for the rest of time and just let the existing boxes mature, that alone would give you a really nice tailwind to profit margins. So it's just important to be aware of that sort of underlying positive mix effect within the business. And so this is obviously another reason why we think the profitability of the overall business is optically depressed today relative to where we think it will get to in the longer term. And then, as we've already said, we see the store rollout continuing. I've already mentioned that the long-term target is 500 or more stores. So, the store base will at least double. Profit margins will probably triple. So you really are set up for a nice tailwind to earnings power growth. So, with all that said, let me now summarize everything we've heard today. So, we believe Floor Decor is an attractive long-term investment opportunity. The US hard surface flooring market it's large, at $40 billion today relative to $4.5 billion of revenue of the company, set to expand because of its cyclical low where it is today, as well as significant pent-up demand. We see that its flywheel strengthens its scale advantages over time. So really important, and we think that will allow this business to grow reliably for a more extended period of time than perhaps is appreciated by the stock market today. Really great leadership under a very experienced CEO. And then we've just explained why we think both the current earnings power is depressed, but also therefore why the future earnings power is likely to be much higher and is probably being underestimated today. So we see, even by 2030, we see this business has a real chance of generating around $1 billion per annum of operating profit. And you can compare and contrast that $1 billion to a sort of a $10 billion enterprise value today. We think it's pretty cheap, pretty undervalued. And you can see the stock price chart on the right-hand side really taking a hit just in the last little while as interest rates have remained high. So we see a lot of upside in the stock from here, and that's why we think it's an interesting investment opportunity worthy of consideration. And so that concludes our presentation today. Thank you very much.